Good day, Tea with Travis. Today is October 9th, and it's Thursday. Not a real positive morning so far for mortgage-backed securities. They took pretty good beating yesterday and recovered some, but we're down, and then today we're down another 66 basis points. So between yesterday's close and today, we're almost down 100 basis points. We're actually a little bit over 100 basis points, meaning 1% of a loan fee. So getting some pounding here in the mortgage-backed securities. So rates have worsened probably about a quarter across the board in most different loans that you look at. The reason for this, because of the fights that are going on financially to counteract this credit crisis that the whole world is still having. Last night, the Central Bank of the Asian economy, they cut their Fed funds rate basically comparable to ours, a discount as well. So that's actually rallied stocks, with China making that move in the Asian markets, as well as all the moves yesterday I mentioned with Switzerland and Sweden, the EU, the European Union, as well as Britain. All of those cuts yesterday, as well as the Asian cuts today. There's a global response to this, but what happens is when there's more money available and rates are lower for short-term borrowing scenarios, it drives up long-term rates, like I've mentioned in the past, and because of that, we're seeing money, pulled out of bonds and put into stocks, because stocks are getting a little bit more confidence back, plus the threat of inflation with everyone around the world cutting their interest rates. It'll drive inflation up more, an economic thought. Outside of that, Gap even is having problems. They just posted their third quarter earnings, and they dropped by 11%, which the third quarter typically for any kind of clothing or retail industry is big because of summer jobs. You have more summer employees spending money that typically wouldn't be spending money that work there, as well as the back to school numbers, and those really didn't correlate with what they'd expected. So Gap's down 11%. It did cause some other concern for other retailing giants. We'll probably see numbers of Walmart and some other ones coming out here this week, but that was kind of a shocker to some. Pseudo good news is the initial jobs numbers for this week came in as expected, still at 487,000, claiming unemployment for the week, but it's it's what they expected, so it's not declining worse, but really a weak jobs market right now. Outside of that, a year ago today, our Dow closed at a record high of 14,164. So exactly a year ago, we saw the highest number ever for the Dow. Today, not quite the case. We're down at 9,153, which is 35% decline on the Dow from a year ago. So that's just how impactful this has been. Talk about not only a bear market, but a recession. So these Fed cuts typically will do is obviously keep us from something drastic like a deep depression, but it's interesting. Outside of that, we are, even though jobless claims came in low or bad as expected, though, we still set a record though for, if you take a 4-week average, the last 4 weeks of jobs numbers, we're at a 7-year high for unemployment claims. So weak job market. Oil prices are down to, again, $86 a barrel. And that should start coming across in the pumps right now. That's not an oil company thing. That's actually a local retailer. Your local gas company is being a little bit slow on the downside as far as adjusting prices. So nothing real positive today. I'm sorry for that. But that is the news, and that's what's going on in the market. And hopefully tomorrow we'll have better news to report, both in stocks and, most importantly, mortgage-backed securities for us that are buying homes and looking to do investment strategies. So have an awesome day regardless. We look forward to serving you, and be blessed.